ExamPrep.School. Virginia Title Insurance Exam, exam code SERIES 11-4. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Insurance regulation, real property, title, exceptions and procedures for clearing title, title insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Virginia title insurance regulations, which definition best describes a producer? A person licensed to solicit, negotiate, and service title insurance contracts. B. A corporation that issues title insurance policies directly to insureds. C. A person exempt from licensure while performing administrative tasks. D. An insurer's employee responsible for underwriting and claims management. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is a person licensed to solicit, negotiate, and service title insurance contracts, as Virginia Code defines a producer as an individual authorized to sell and service insurance products. Reason B is not correct. Issuing policies directly is a function of an insurer, not a licensed producer. Reason C is not correct. Administrative personnel performing clerical tasks are not considered producers and may still require licensure. Reason D is not correct. Underwriting and claims management are insurer functions separate from solicitation and negotiation by a producer. Question 2. How many hours of prelicensing education are required for an individual to qualify as a title insurance producer in Virginia? A. 40 hours. B. 30 hours. C. 24 hours. D. 18 hours. The correct answer is D. The correct answer is 18 hours, as Virginia regulations mandate 18 hours of approved prelicensing coursework for title insurance producer candidates. Reason A is not correct. 40 hours exceed the requirement and apply to other lines of insurance, not title. Reason B is not correct. 30 hours are not specified for title insurance prelicensing in Virginia statutes. Reason C is not correct. 24 hours is a common misconception but exceeds the Virginia mandate. Question 3. Which requirement must a non-resident title insurance producer fulfill to obtain a Virginia license? A. Maintain a Virginia business address for transactions. B. Pass the Virginia State Ethics Examination in person. C. Provide evidence of a Virginia-controlled net worth. D. File a consent to service of process and designate the commissioner as agent. The correct answer is D. The correct answer is filing a consent to service of process and designating the commissioner as agent, which Virginia law requires for non-resident producers. Reason A is not correct. Non-residents are not required to maintain a Virginia address to be licensed. Reason B is not correct. There is no separate Virginia ethics exam requirement for non-resident title producers. Reason C is not correct. Net worth requirements apply to insurers, not individual non-resident producers. Question 4. What is required for a business entity to be licensed as a title insurance producer in Virginia? A. At least one licensed individual producer employed by the entity. B. A registered securities broker-dealer affiliation. C. Annual financial statements audited by the commissioner. D. Designation of a Virginia licensed claims adjuster. The correct answer is A. The correct answer is at least one licensed individual producer employed by the entity, as Virginia regulations mandate for business entity licensing. Reason B is not correct. Broker-dealer affiliation is unrelated to title insurance producer licensing. Reason C is not correct. Audited financial statements are not a prerequisite for entity producer licensure. Reason D is not correct. Claims adjusters are not required to be designated for business entity producer licensure. Question 5. Within how many days after issuing an appointment must a title insurer file notice with the Virginia Bureau of Insurance? A. 15 days. B. 45 days. C. 30 days. D. 60 days. The correct answer is C. The correct answer is 30 days, as Virginia statute requires insurers to file appointment notices within 30 days of issuing them. Reason A is not correct. 15 days is shorter than the statutory filing period. Reason B is not correct. 45 days exceeds the time frame set by Virginia regulations. Reason D is not correct. 60 days is twice the allowable filing period under state law. Question 6. Within how many days after the effective date of termination must a title insurer file a termination notice for a producer appointment in Virginia? A. 15 days. B. 45 days. C. 30 days. D. 90 days. The correct answer is C. The correct answer is 30 days, since Virginia law requires insurers to file termination notices within 30 days after the effective date of termination. Reason A is not correct. 15 days is shorter than the period required by statute. Reason B is not correct. 45 days exceeds the statutorily allowed window. Reason D is not correct. 90 days is well beyond the statutory deadline. Question 7. 2 months before his Virginia title insurance producer license renewal, a producer has completed 21 of the required 24 hours of continuing education, including only 1 hour of approved ethics instruction. According to Virginia regulations, what must he do to satisfy the biennial continuing education requirements by the renewal date? A. Complete the remaining 3 hours of approved continuing education, including at least 2 hours of ethics by the renewal date. B. Complete the remaining 4 hours of approved continuing education, including at least 2 hours of ethics, by the renewal date. C. Complete the remaining 3 hours of approved continuing education in any subject area by the renewal date. D. Complete the remaining 3 hours of approved continuing education, including at least 1 hour of ethics by the renewal date. The correct answer is A. The correct answer is to complete the remaining 3 hours of approved continuing education by the renewal date, including at least 2 hours of ethics, which fulfills both the 24-hour total and the 2-hour ethics minimum under Virginia law. Reason B is not correct. This requires too many total hours beyond the 24-hour mandate. Reason C is not correct. This fails to include the required ethics component needed for renewal. Reason D is not correct. This adds only 1 hour of ethics, which does not meet the 2-hour ethics minimum. Question 8. A Virginia title insurance producer changed their principal business address on June 15th. Under Virginia insurance regulations, by what date must the producer notify the commission of this change? A. By June 25th, within 10 days of the change. B. By July 15th, within 30 days of the change. C. By July 30th, within 45 days of the change. D. By August 14th, within 60 days of the change. The correct answer is B. The correct answer is that the producer must notify the commission within 30 days of the address change, which makes July 15th the deadline under Virginia regulations. Reason A is not correct. Virginia requires a 30-day notification period, not 10 days. Reason C is not correct. There is no 45-day notification window under state regulations. Reason D is not correct. A 60-day deadline is not permitted. The requirement is 30 days. Question 9. Alpha Title Services LLC plans to conduct business in Virginia under the fictitious name Alpha and Beta Title. Before using this name, what must the firm do to comply with Virginia licensing regulations? A. File an assumed name certificate with the county clerk and notify the commission within 60 days. B. Register the fictitious name with the State Corporation Commission and file a copy with the Bureau of Insurance within 30 days of first use. C. Publish a notice in a local newspaper and submit proof to the commission within 30 days. D. Obtain prior written approval from the commission before using the fictitious name. The correct answer is B. The correct answer is that the firm must register the fictitious name with the State Corporation Commission and file a copy with the Bureau of Insurance within 30 days of its first use to meet Virginia requirements. Reason A is not correct. County clerk filings in a 60-day window are not the procedures for insurance assumed names. Reason C is not correct. Publication in a newspaper is not required for assumed name filings under insurance regulations. Reason D is not correct. No prior written approval is needed. Post-registration notification within 30 days is sufficient. Question 10. Under the Virginia Insurance Code, what investigative authority does the State Insurance Commissioner possess? A. Mandate changes in an insurer's marketed rates without a hearing. B. Levy fines of up to $50,000 per violation without judicial approval. C. Administer oaths, subpoena witnesses and documents, and examine insurers' records. D. Draft and enact insurance statutes independently of the legislature. The correct answer is C. The commissioner can administer oaths, subpoena witnesses, compel document production, and examine insurer records under Virginia Code Section 38.229. Reason A is not correct. Rate changes must follow notice and hearing procedures before adoption. Reason B is not correct. Fines require formal adjudication and court confirmation, not unilateral issuance. Reason D is not correct. Legislative authority to enact statutes resides with the General Assembly, not the Commissioner. Question 11. Which element must be included in a Virginia cease and desist order issued by the Insurance Commissioner? A. A detailed plan for restitution payments to affected policyholders. B. An automatic suspension of the offender's insurance license for 60 days. C. A description of the alleged violation and a directive to stop the specified practice. D. A provision for assessing civil penalties without a subsequent hearing. The correct answer is C. A cease and desist order must identify the alleged violation and direct cessation of the unlawful practice under Virginia Code Section 38.2 Le Statute 17. Reason A is not correct. Restitution requires separate enforcement proceedings and is not part of a cease and desist order. Reason B is not correct. License suspension is not automatic. The order only directs cessation pending hearing. Reason D is not correct. Civil penalties can only be imposed after notice and an administrative hearing. Question 12. Which action constitutes an illegal rebate under Virginia insurance law? A. Providing a no-cost premium forgiveness rider filed with the Commissioner. B. Offering a reduced premium rate through a publicly filed rate schedule. C. Returning a portion of the paid premium to a policyholder as an incentive. D. Granting a policyholder a loyalty discount specified in the policy. The correct answer is C. Returning premium funds to policyholders is an unlawful rebate unless explicitly filed and approved as part of the policy. Reason A is not correct. A properly filed premium forgiveness rider is an approved policy feature, not a rebate. Reason B is not correct. Filed rate schedules approved by the Commissioner are legal and not rebates. Reason D is not correct. Loyalty discounts that are specified in and filed with the policy are permissible. Question 13. Under Virginia regulations, which of the following would be considered an illegal inducement to an insured? A. Providing a branded pen and notepad under $5 in value with no purchase. B. Offering a free weekend spa retreat for purchasing an insurance policy. C. Distributing an insurer's publicly filed rate brochure to prospective clients. D. Handing out a 5% premium discount printed in the policy documents. The correct answer is B. Free spa retreats exceed allowable nominal gift thresholds and violate inducement rules under Virginia Code Section 38.2.1019. Reason A is not correct. Small promotional items under statutory value limits are allowed advertising gifts. Reason C is not correct. Sharing publicly filed rate brochures is permitted as informational material. Reason D is not correct. An approved discount printed in the policy is not considered an inducement. Question 14. Which practice constitutes misrepresentation of policy terms under Virginia insurance regulations? A. Explaining coverage limits using the exact language from the policy. B. Providing a copy of the filed policy form to the insured upon request. C. Telling an applicant that flood damage is covered when the policy excludes it. D. Referring clients to the insurer's approved rate manual for premium tables. The correct answer is C. Misstating coverage, such as claiming excluded flood coverage is included, is a misrepresentation under Virginia Code Section 38.2.216. Reason A is not correct. Using language directly from the policy accurately conveys terms without misrepresentation. Reason B is not correct. Insurers are required to furnish filed policy forms to insureds. This is not misrepresentation. Reason D is not correct. Referring to an approved rate manual is permissible and does not misstate policy terms. Question 15. A title insurer circulates a brochure stating its standard policy provides coverage for all title defects, without disclosing the exclusion for unrecorded liens. Under Virginia's title insurance regulations, which action most clearly constitutes false advertising? A. Claiming the policy covers unrecorded liens despite the written exclusion. B. Citing published rate manuals to support quoted premium amounts. C. Leaving out that commitments must be followed by a policy issue. D. Using customer testimonials without indicating prior relationship. The correct answer is A. The correct answer is the claim of coverage for unrecorded liens, which misrepresents the policy's terms and violates the prohibition on false or misleading statements. Reason B is not correct. Referencing a published rate manual is a truthful statement and not prohibited as false advertising. Reason C is not correct. Omitting procedural details about commitments does not amount to a false assertion about coverage terms. Reason D is not correct. Using testimonials without relationship disclosure may be regulated elsewhere but is not false advertising of policy benefits. Question 16. An agent tells prospective clients that a rival title company had its license suspended for fraud despite having no evidence. Under Virginia law, this practice most directly violates which prohibition? A. Refusal to issue a policy based on geographic area. B. Engaging in rebating or offering unauthorized inducements. C. Misrepresenting the benefits or advantages of title policy forms. D. Circulating unverified claims that injure a competitor's reputation. The correct answer is D. The correct answer is the circulation of unverified claims about a competitor's license status, which constitutes wrongful defamation under state regulations. Reason A is not correct. Refusing issuance by area relates to unfair discrimination, not defamation. Reason B is not correct. Rebating concerns unauthorized incentives, not defamatory statements. Reason C is not correct. Misrepresenting one's own policy forms is false advertising, not competitor defamation. Question 17. A title company conditions a lender discount on the lender using only its escrow services and warns that failure to comply will lead to cancellation of the discount. Under Virginia's title insurance rules, which practice is this? A. Failing to file rates with the state commissioner. B. Coercing use of affiliated services by threatening economic harm. C. Misstating the scope of title coverage in promotional materials. D. Offering unauthorized rebates to secure business. The correct answer is B. The correct answer is coercing the use of particular services through economic threats, which is banned as boycott, coercion, intimidation. Reason A is not correct. Not filing rates is a compliance issue but unrelated to coercion. Reason C is not correct. Misstating coverage relates to false advertising, not coercion. Reason D is not correct. Offering rebates pertains to unauthorized inducements, not threats to enforce service use. Question 18. Which agent principal duty compels the agent to maintain separate records and provide an accounting of all funds and property received on behalf of the principal? A. Duty of loyalty. Act solely for the principal's benefit and avoid conflicts of interest. B. Duty of obedience. Follow all lawful instructions of the principal. C. Duty of care. Exercise reasonable skill and diligence when performing tasks. D. Duty to account. Segregate and report every receipt and disposition of principal funds or property. The correct answer is D. The correct answer is the duty to account, because an agent must keep separate records and furnish a full accounting of funds and property handled on the principal's behalf. Reason A is not correct. Loyalty requires acting in the principal's interest, but does not mandate record-keeping of funds and property. Reason B is not correct. Obedience means following instructions but does not address creating financial records. Reason C is not correct. Care involves performing with skill and diligence, not accounting for funds. Question 19. Under agency law, which best defines apparent authority? A. An agent's authority explicitly set forth in a written agreement. B. An agent's authority based on the principal's conduct, leading a third party to reasonably believe authority exists. C. An agent's authority inferred from actions necessary to carry out express instructions. D. An agent's authority arising solely from emergency circumstances without manifest principal consent. The correct answer is B. Apparent authority arises when a principal's words or conduct cause a reasonable third party to believe the agent has been authorized to act. Reason A is not correct. Express authority is explicitly granted, not merely impressed upon third parties by principal conduct. Reason C is not correct. Implied authority is inferred from necessary actions, not from third-party perceptions. Reason D is not correct. Emergency or inherent authority arises from necessity without principal manifestation, not from principal conduct. Question 20. Which of the following best reflects the fiduciary requirement for handling client funds held in escrow by a title agent? A. Deposit into a separate trust account at a state-insured depository, maintaining a subledger for each principal. B. Deposit into the agency's general operating account, provided a running track of individual transactions is maintained. C. Hold in cash or negotiable instruments until closing, dispersing them only upon principal's instruction. D. Transfer to the principal's designated account within 5 business days absent a written escrow agreement. The correct answer is A. The fiduciary requirement mandates that client funds be placed in a distinct trust account at an insured depository with separate ledgers for each principal to prevent commingling. Reason B is not correct. Commingling personal or operating funds violates segregation requirements despite internal tracking. Reason C is not correct. Holding funds in cash does not satisfy the requirement for a designated trust account at a depository. Reason D is not correct. Transferring funds without an escrow agreement and within a fixed period disregards the need for a dedicated trust account. Enjoyed this practice test? tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.